Okay, so that's LifePlan Fly. Let's look at the data collection form. Now there's a few key things to note with this form. This form is just being finalised, and there's a few things I need to add to it, so it's not quite complete, but it will be for early next week. So when a client says yes, they want to go ahead, you email them this form. First of all, focus on what the client will receive. See up the top there? We need to let the client know exactly what they're going to get for their money, because otherwise they might assume that we're going to be doing other things for them. So this is the scope limitation. After the client completes the form and sends it to us, our financial advisors will review their circumstances, then prepare your life plan report. We'll then meet with you for 1 hour to discuss your life plan and make any necessary changes to the calculations. At the conclusion of the meeting, we will provide you with an action plan going forward and a fixed price quote for our future services. So that action plan would be, okay, well look, the client might say, I want to investigate putting more into super. We've realised they're dramatically underfunded with insurance, so I'll give them some advice about insurance. They don't have an up-to-date will, so we're going to get our recommended estate planning lawyers involved there. A whole range of things. So that's when we can start to get into your classical financial planning advice. A life plan, in a way, it's like doing an initial report based on a financial needs analyzer, but being paid for it and giving the client something of extreme value at that early stage. Now, note this important disclaimer. This is not financial planning advice. Rather, it is financial modelling of a possible future financial outcome based on certain circumstances. No one can give a guarantee about future projections and outcomes. All projections on this document are based on a view of the future, and as views of the future differ, the projections and calculations will always be a matter of opinion and not fact. So it's a similar sort of disclaimer you might have in a business valuation. But it's very important to realise we're not giving financial planning advice. We're merely modelling what their what their current circumstances projected the future could be, and maybe 2 or 3 options of that. What if, based on this scenario, they fully paid off their home loan, or what if they did all sorts of, you might put a certain amount into super, or you might put a certain amount into, you might buy a rental property, which a lot of people are asking about. So these are just taxation calculations, not investment advice. The instructions, and the client needs to fill out this form and send it back. Here's a key thing, payment details. Get an upfront payment from your client before you even start. Get your client to pay by credit card or direct debit. So we put that payment details area on the front page. And if the client doesn't pay up front, we won't do the work. Simple as that. We're really focusing for the next period of time now, our new accounting firm, on not having any debtors. So if the client wants the work, they can pay up front. I just had a client come in 1 hour ago, and we went through this whole situation. They've been an accounting client for a number of years. We've been doing they have a company, do some consulting work through it. It's probably a $2.5 grand a year client, where it's pretty straightforward stuff. Do the accounts for the company, goes out, he owns the shares in the company, which is not the way I would like it, but that's the way it is, and we do his tax return. He's making 85 grand a year. Now he came in and he said, look, he's 50, he's got about 50 to 60 in super. There's a few situations, difficulties he's had in the past, but he wants to really get started putting things away for the future and building up for when he wants to work less. And he said, look, I'm thinking about buying a property, or I just don't know what to do. And I said to him, look, we've got a new service we're offering, it's called LifePlan. Let me explain. And I explained it to him. I said, drew the little graph on a piece of paper, showed how assets went up over time, and said to him, this is what we can offer, this is what we can do. Price is $1,000 plus GST. Are you happy with that? And he said, that's fantastic, that is really, really good. Let's get started straight away. So what we're doing is when we just get this form finished, we're going to send it through to him, and he will send everything back. Not a problem with the payment details, and because it's tax advice, which we're giving to him, then he can claim it as a tax deduction straight away, which is really cool. Now, he's looking at buying a property, and we're going to be modelling his current situation, plus what if he bought a property, what the outcome would be. He can see very clearly then, based on the assumptions that he'll give to us, we'll agree on what's the capital growth of the property going to be, we agree on what the rental yield's going to be, and we'll just model out based on that. So the price, I really believe, is a good price for it, and the process and the offer, I really believe that based on the number of clients we've spoken to about this, including one just an hour ago, I think it will really, it will help clients in a way that they haven't been helped in the past. What is the main reason you've requested our advice? This is a key question as well, because it gets to the heart of why a client wants to do something. And we might have a feeling, look, here's a client, 50, not much super. We might think straight away, look, from a tax point of view, they really should be putting as much as they can into super. But the client might have an entirely different idea about something. They might be about to inherit some money or inherit a property, and they don't really want to put money into super, and they want to focus on something else. So we could make a wrong assumption unless we get straight from the client exactly why they're motivated to talk to us in the first place. So that's why we've got that question there. Then we get the client to sign off. Next few pages are pretty straightforward, just a data collection form. I'm adding a few other things in this early next week. You'll see them added in, but we're going to expand a bit more about income that they've currently got and what could happen in future years. Just over the page, client information. So that's where we'll get them to list out any investments they have, any assets, any liabilities, and anything else like that. So there'll be one more page added to this, and then they get sent back to your office to do the life plan. So to do the life plan, we've got two ways of doing it. If you're an account member, or if you're not an account member, we've got quite a few PIS members using Account GPS at the moment, and if you're using XPlan software, they've got a CALM module, C-A-L-M, and that allows you to put all the information in and then project out. Now, if you haven't got access to that yet, we'll have a more limited version, but still a very good one, available on the website, Account GPS website, as a spreadsheet. And so that way you can put some of the details in there, and it will project ahead and do the same, similar sort of outcome. Let's jump into the life plan and have a look. Just got a question here, by the way. Put your questions through and we'll try and answer them. This is from Nathan. Hi Nathan, how are you doing? Has the disclaimer been signed off by account and legal? What we're using is a generic disclaimer, which is very similar to the ones used by similar software that you remember, the CALM, C-A-R-M software and other things like that. They're focusing on doing the same sort of thing, modelling that accountants can do that is not bordering on financial planning advice. So yes, while I don't believe, and this is not supposed to be coming from your financial planning firm, this is coming from your accounting side. Okay, it's modelling from your accounting side. Having said that, we will make certain that account and lawyers are happy with the disclaimer we've got in here when we release the final product. So good question, Nathan. Thanks for that. Okay, so here's the life plan. What we're doing is we've put just a generic photo on the front and a bit of a kind of like a crayon sort of feel on that photo. We're actually going to be asking our clients to bring in a photo of them and their family, and we'll scan it and we'll put that on the front of the life plan to personalise it. So when they come in, before they come into the initial meeting, that's a nice touch we thought that we'd make. So you put your logo on there, change anything around that you need to. And here's the first page of the life plan. You can see it's only going to go for 4 or 5 pages, but it looks nice document. It summarises their current situation. So welcome to your future. It says the life plan will answer these questions. Why are you working or in business? Where will you be in 10 years' time? We've got the disclaimer repeated right at the very front. Then we go through their current situation and we say, look, all plans in your starting point for your life plan are the current values of your income and expenses. These are what you provided to us. So you list them out there. Their assets and the owner, John or Mary or their family trust. I'd sum up everything and put it all together here. The fact that it's in a family trust or a super fund, you put the owner in there, but we really want to get for the family as a whole what their overall situation is. And the same with liabilities. So we've got that listed out there. Over the page here, we've got annual income listed out as well. So that just sets the scene for everything. Then we go through, right, key assumptions that we've made. Key assumptions are both of you will not stop working and lose your jobs. Your annual incomes will increase by 3% a year. Properties will grow in value by 5% a year. Any shares or managed funds they have will grow in value by 7% and provide an income return of 4%. So you see, if a client comes into you, you might have a new client, you haven't even done financial planning advice. But what we need to do to start the ball rolling is to say, okay, and this gets to the heart of, I suppose, a lot of what's been discussed in the financial planning industry, and that is due to the current government requirements, you can't really give specific advice to clients without having a look at their whole situation. So a client that comes in, they don't want a complete financial plan in a lot of circumstances. They just want information on super. They want information on shares or whatever. And so we're taking the approach here. We're not giving you any advice. We're not telling you to put more money into super. We're not telling you to buy a rental property. We're merely illustrating, if you did nothing, this is what's going to happen in 10 years. If you were to buy a property, this is what would happen. If you were to put money into super, this is what would happen. So then your client has some definite outcomes there that they can then think about and then seek financial planning advice with a better foundation for talking about that. So that, any other assumptions you list out there, let me say, right, what your life plan reveals. Once again, change this around to your client's circumstances. I'm thinking I'll be doing it with 4 options, and that is option 1, any surplus cash they have every year, you put in a cash management account and earn interest. Option 2 would be pay any surplus cash against your home loan and then in a cash management account. Option 3, pay any surplus cash in a portfolio of shares or funds. Option 4 could be put into a super investment. And we say here, your net financial balance doesn't include the projected value of your family home. So family home, that's an asset, but it's not a financial asset, it's a lifestyle asset, because we don't want to assume you're going to sell off the family home to provide for any money in retirement. Then based on those net financial assets in 10 years' time, you can say, okay, if you have an income stream based on that, it might be X amount a year. You could decide to include that. You mightn't decide to that. You might just focus on the net financial asset balance in 10 years' time. So it's up to you as to how far you want to get involved. And I'm thinking just focusing on how much they'll have in 10 years rather than income streams is the way to go. So I'll probably take that income stream area out, but it's up to you. And you see here the next steps. The Life Plan report has made you more aware of how your financial future could turn out. And if you make a few key decisions now, it could result in a substantially better future. We recommend the following action steps. Debt reduction, request a loan review, invest for growth, request our advice about property investments, share investments, supercharges, super. You know, you could put something in there. So that's for you to alter. But you've got key advice areas there that you can then recommend that they seek action, and that's when they get financial planning advice. But this is giving them a good summary up front of what they actually need. And then you'll sign off.